Welcome back. You're watching Stockwatch with me, Julieta Televi, and joining me to take your stock-related questions this evening are Graeme Körner from Körner Perspective and Nader from Benguela Global Fund Managers. If you'd like to send questions to us, please email stockwatch@bdtv.co.za or via SMS on 41392. Graeme, good evening to you both. Graeme, if I may start with you. Not a great finish overall for the JSE today, and some particular shares came under pressure. Perhaps we could talk about, I suppose, the two maybe quite widely held, Absa and Kumba. Let's talk about Absa, and I know we've had Koki Koiman on the show talking about the results, but they seem to be very disappointing compared to the rest of the banking fraternity, or at least so far.
I think they're more exposed, good evening, they're more exposed to, I suppose, the traditional middle class market, maybe. So I think that's where the real pain was felt. If you look, CIB seemed to do quite well, and the African operations really are doing nicely. So, but it was a disappointing result. You know, they managed to limp home with a 1% increase in net. But compared to, you know, the next poorest, in inverted commas, was FirstRand with 6. And then Nedbank, I think, was 11, and Standard Bank, obviously, you know, the standout in the 20s. So it was a disappointing result, but I think this is what happens when, you know, when your consumers are under pressure. You have to provision, and I always say, you know, you're forced to provide quite a big number, and chances are, you know, when you attach a home or a vehicle, maybe a vehicle's a bad example, you tend to claw back more than, you know, than you've impaired. So even if things do, you know, if the sky falls on our heads, we still probably at 118 basis points are reflecting a very bad scenario. So yeah, it was a disappointing result. I think it was 24.55 HEPS. You know, if you put it on a 10, and no idiot would put in any South African share on a 10 multiple, you know, we don't deserve that kind of rate. But if you put it on a 10 for a minute, that puts it on $240, you know, from where it closed today. It's almost 100 Rand upside. And dividend, I think, was 13.70 for the year, which is over 8%. So sure, the market was disappointed, and I must confess myself as well, but you know, this too shall pass. And when the cycle turns, I think it'll look a lot better. But definitely disappointing result, and the market really punished it. Yeah. I think they were down about 5% on the day.
Yeah, Grant, and there were quite a few. There have been quite a few stockbrokers and portfolio managers on the show who have picked Absa as their banking stock of choice. They say it's the most undervalued. They thought it would be most likely to benefit from a turnaround if there's an improvement in consumer sentiment and economic growth. Do you think you just have to hang in for a little bit longer and you will see the benefits? I mean, as Graeme says, you know, if it's based on today's results, you've got a, you know, less than 10 PE and a dividend yield of about 8%. I mean, those are quite compelling.
It is compelling, Julieta. And yes, so I was also disappointed with Absa's results. I think if you look at Nedbank and Absa, those are the two cheapest stocks, and Nedbank delivered a far better set of results. Absa was a little bit too aggressive with their lending in trying to capture market share the last couple of years. I feel that's come back to bite them, and they're having to rein in that loan book now. And that's also being reflected. You're seeing the credit loss ratios high and under pressure. But the banks as a whole are very plugged into the economy, to the South African economy. And at this point, if you think there's going to be some recovery, or even if things stay the same, they're very defensive. They've got the big four market share, Capitec's at the margin, eating at some of their lunch. But I would say at that, given the dividend yield, that's incredibly attractive, and a multiple that's well below 10, it's closer to, I think, 6 or 7. It's fine. You can sit on it, you can hold it. It's a fairly good value for what it's going to give you, and it will turn for the better if we start seeing the rate cycle come lower and things improve in the economy, in sentiment, and in economic activity.
Okay, just keeping with this theme, and maybe at some point we'll talk about EPE Capital Partners, because as an investment holding and / private equity company. But a viewer says, please ask the panel's view on ARC, African Rainbow Capital. I bought the share with the mindset that maybe they will unbundle and list Time Bank. So sticking with banking. Graeme, going back to you, do you think that is a likelihood, or do you think it's too early for that event to take place? And if so, do you think it would have a sort of a profound impact on ARC's share price?
Yeah, so I mean, we like the ARC story. Obviously, Time Bank is one, Rain is another one. Probably Rain is the one that a lot of people have got question marks over. But we really like the portfolio, both of the active, let's call it the financial services businesses, as well as the others, even businesses like crops, we think are exciting. So, as Grant said, I don't know what the right discount is for investment holding companies in a normal world, although I don't know if we'll ever get there in South Africa again. But, I don't think 50% is the right number. So whether they list Time Bank or not, I think it's becoming a little bit more debatable, because as Time itself shoots into Southeast Asia and has done capital raises, it's no longer just kind of their core, I think. So I think, but I like the Time Bank story very, very much. It's broken even now, which I think is good. But the real story there lies, in the optionality of the client base, because you can sell them all sorts of gadgets and financial services now. And secondly, I think it's a hell of a lot cheaper to set up a new bank, as they've proven in Vietnam or the Philippines or wherever. It probably costs you a quarter of what it would have cost you to develop the original. So we like the Time Bank story, but I like the ARC portfolio overall. The small cap market in South Africa is unloved in the extreme. I think management there, and they're obviously incentivized, looking to basically stay on the front foot. So if needs be, I think they've got deep-pocketed friends. I think if you've got them and you still like the story, buy more. If you haven't got them, I think it's a very compelling long-term story. And you're investing with great company, both in leadership and in the chair. So we like the story very much.
Grant, how do you view ARC, and would you buy it for Time Bank, or would you buy it for something else, or would you buy it simply on the basis that it's too cheap, as Graeme suggests, and the discount is just too wide?
It's a really interesting one. It has been cheap from the start, and it gets cheaper. And I think some of the problem they have is a problem with identity. So a lot of the time, you're not just buying Time Bank, or you're not just buying Rain. There's a lot of private equity type of holdings, and the disclosure is not always the best on all of those. And its stated purpose is to be more financial services, and yet they hold a number of disparate investments. So I think it's quite difficult to put your finger on what you're buying as an investor unless you really focus on one or two of those big stories. And so I think the Time Bank would be a great value unlock. I don't think it's likely. I haven't spoken to management. I would be surprised if they list it, because they don't want to be spinning off the crown jewel, and then what are you left with if you do unbundle it? So I think if you're patient, you could probably hold on to ARC. I mean, I think that value, that discount is material, but in terms of how and when that unlocks, it's very unclear, and you may still be sitting in a similar discount to NAV situation 3 years from now. You just need to be very patient, and the evidence is there when they're raising capital. You can see the price at which they're raising at, lower than the current share price, which was already 50% discount or 45% discount, tells you the lack of investor confidence in that NAV number. And I think that's coming from a lack of clarity in terms of exactly what you're buying and what kind of earnings and cash flows are underpinning that. So it's a difficult one. I think, sure, you can be patient. There's a large margin of safety, but I think you need to be very patient.
Okay. Another stock that's, I suppose, been a bit of a conundrum for local investors is British American Tobaccos. And the viewer says, is it not a buy now with a dividend yield of over 10 and a PE of 6? Most analysts' target prices are still well over 750 Rand a share. What are your thoughts? Graeme, what do you do with this one? Because it's a sort of dying business in a way. But is it enough to give you good cash flows while it's in terminal decline?
So I think if you, and I mean, a lot of the big institutions in South Africa hold lots of these, and I think the view is exactly that the market is maybe being too negative and worried about class action and all these shifts. But But I think we've seen it once or twice in the last while that, things can come out of left field, whether it's a menthol ban in the US or, just strange things can actually upset that. Because what you're really doing is you're buying the cash flow and saying, this business is just going to rust away to, almost nothing, but I'm going to make a ton of money out of the cash flow. I'm not entirely sure that that is right. If you look at the share, just if I may, over the last 10 years, it's below the level it was at 10 years ago. And that's in South African rands. If you look at this thing in the London listing, it's telling you, I think that people are becoming quite skeptical of it. Interestingly, I mean, we have some small residue positions, but generally we held them through Reinet, which has been a far better play. And you've seen exactly as we hoped they would do, them offloading that and using that cash flow for pension insurance corp and other things, mainly pension insurance corp. So, it's a really difficult call. I would go so far as to say, I don't think you want to own this thing 2 years from now. You may say, you might get a nice kick up, maybe, 15, 20%. But then I think you want to start seriously exiting the building and leave the last few cigar butt smokers to have their fun with it.
Yes, I mean, Grant, David Shapiro always talks about how smokers are banished to the 10th basement of a building. No one wants to see a smoker in their ambit, which is a real problem if that is your business as British American Tobacco. Do you think actually to stay away, find something that is a growth industry, not one that is exactly the opposite?
Yeah, true. I think the dividend yield is very attractive, but if that is your only story, it's almost, you may as well put your money on deposit. All you're hoping to do is get a high dividend. There has to be some way to grow that dividend over time. And they have some serious constraints around that outlook. However, I will say there is the outlier of the e-tobacco and vaping and all of that. And if you just look at the youngsters of today, the take-up is exponential. And it's very quickly becoming a larger and larger part of these global tobacco companies. Unless they come and start regulating that quite quickly and aggressively. The UK has already started to talk about that, so that is definitely a risk. But the saving grace for this company could be in 3 or 5 years' time, these e-cigarette type of things could be 30 or 40% of the business. The way the take-up is, it's the cool factor, it's got all the things that cigarettes used to have 30 or 40 years ago.
Yeah.
The youngsters are smoking them hand over fist. As scary as that is, it's currently sort of being unregulated and unmanaged. So generally, it's not very compelling, but there is this outlying optionality that could come in and save the day. And time will tell. We'll have to see.
Yeah.
If I can just add, sorry, on that, we must remember that e-cigarettes and vaping was brought into the ambit with the budget. So I think that, that's also quite relevant. But I mean, we were talking about Absa. The dividend yield's not too far from this. I think Grant and I would probably agree. You'd rather put your cash into Absa, you're getting a dividend yield much the same. So sorry to...
Yeah, and an option on future growth. Yeah. What about another dinosaur, and that is Telkom? And the viewer says Telkom seems to be in the dithering Ramaphosa mode. They can't break into the mobile phone space, are effectively exiting the fixed line business. They no longer operate their fixed line fault reporting service, for example. That's the classic lose-lose situation. I'm sure there's a profitable niche space for them in both those areas in the short to medium term, with the possibility of breaking through somewhere into the big time in the future. So, interesting. So the viewer starts off by talking about the lose-lose situation, but seems to have quite a lot of faith in a future for Telkom. Okay, Grant, I'm going to ask you first, and then I'll ask Graeme. Do you think that's a plausible scenario for Telkom?
Wow, I guess it's plausible. Is it probable? Is the second question you have to ask, and I'm not sure about that. They are looking for ways to grow in a less capital-intensive basis, and of course, this telcos industry is heavily capital intensive, and they are struggling. The leaders are struggling to grow earnings and build a business. So Telkom is the sort of third and fourth player, and they're in a really tough space. That I think BCX is a reasonably good asset, but it's a tough one, and I don't see exciting prospects ahead. Management has managed to, they have written down a significant portion of the assets so that their base is very low. But of course, that only gets you so far. The growth looks nice for 1 year relative to the base, but what happens after that? So it's not one that I would rush to own. I don't have a visible path to growth for them. When I look at them, I don't have confidence in the management, so I would stay away from that one.
Graeme, what are your thoughts here? Because the market actually has seemed to have given them the benefit of the doubt, from the start of the year. Over a one-year basis, they're still down.
Yeah, so I have a slightly different view on this, and that is that they do have assets. If you think about the mobile business, it's not a great asset, and we've seen with Cell C that it's pretty tough to make a lot of money unless you're really big dog. And obviously the fixed line business is dying. I think if I think about the fiber, the open serve business, I think that's pretty decent. And as Grant says, maybe BCX gives them something different. But my point is there's a property portfolio and there's all sorts of bits and pieces, and you add it all together, it's probably worth more than the current. We saw the previous management put a consortium together, if memory serves, that had the PIC involved, which I thought was quite interesting, considering that government is still a significant shareholder. So I think there's optionality in here, but the telco space, and you can throw MTN and Vodacom into that bucket as well. It's not a happy place. It's a very competitive. You've got lots of new technologies or not so new technology, just eating their lunch. So I think if you are a value investor and you can come up with a hypothesis on how this value will be unlocked, I think there is a bet possibly there. But you know what? I mean, what Grant and I are saying is there's just so much value in the South African market. You can buy an African rainbow capital at a 50+% discount to NAV with good assets. So, there's so much value around, you really have to go scratching around the bottom of the barrel. But I do think there is some optionality in it.
Yeah, okay. Right, sorry, and before I get to, there's a question on elections, which I'm going to get to now, but just talking about, I suppose, real value plays. What about Brait? What happened to it today, and is there unrealized value in the share, asks a viewer. Grant, did you have a look at it at all?
I must confess, I missed it. I didn't see the movement today. I think spinning off Premier, what I do know is that spinning off Premier was good for the debt in the business. It's a significant reduction in that debt pile. And then they're left with Virgin, which looks like a decent asset, I think. Beyond that, there's potentially value in there, but it's hard to see how they unlock the value. So
okay,
I can't give you any strong opinions on this one.
No problem. Graeme, I mean, the share was down 15%, so that is quite a plunge.
But I mean, in context, if I may, on a 2 billion rand market cap, which is at a deep discount to actual value, probably, 4 million shares, which represents 6.3 million rand traded. So, somebody, needed to get out of the position. But, I've become a bit suspicious of these market moves on thin volumes.
Okay.
And I thought or my chair collapsed rather.
Shall I? I'll go to Grant while you sort out your furniture, Graeme. And
Sorry,
it's like the Nhlanhla Nene of Stockwatch.
Sorry, I've got a reasonably steady chair now.
So you don't think it's do you think it's just a one-off by a hasty seller?
No, but what I'm saying is clearly the market is worried. They've got some debt due later this year. There are worries that if they need to capitalize Virgin, for example, do they have the money? So yes, I think there are some legitimate concerns. But if I look at Premier, I'd say it's a good business. Coming out of the Ethos presentation today, I think Virgin Active is a better business than it has been for some time. New Look hopefully is coming right as well. So I think what's really worrying the market is refinance, and particularly when the debt has to be repaid later in this year. But I think there's decent assets there if you're not worried about the refinance, which I don't think is a big deal. And I think the Ethos team seem fairly confident in their ability to refinance. If that's not an issue, then what's the right level of discount for an investment holding company with decent assets? Again, I don't think it's 50%.
Yeah. Okay.
I will say just quickly, this one's been very disappointing. What Ethos was supposed to, turn this business around, and I think it talks to the real challenges that are in that business, in those underlying businesses. Excuse me, that Ethos after a number of years now, still hasn't been able to really extract any value for shareholders.
Yeah, no, it's fantastically difficult being an investment holding company, maybe globally, but most acutely in South Africa. Okay, I'm going to ask a question from a viewer who asks about elections, and he says, I read, the outcome of voting is not the point of interest, rather it is what happens thereafter. I think this refers to the fact that we believe the ANC is losing their majority and a sort of coalition will take effect. What does the panel believe is the impact of this year's election on the markets? What are possible scenarios and their impact on equities? Grant, have you been applying your mind to this rather thorny question?
Yeah. I mean, this is something you have to think about. It's very difficult to prepare for in the face of the unknown, but you certainly can't ignore the fact that it poses both risk and opportunities. You know, sort of negative surprises go straight to the currency and they go straight to the stock market. I think the coalition is typically, coalitions are not great in terms of functionality. They don't function that well as a government, but the positive of that is it brings some of that, like, let's call it survival instinct into the ANC, and they realize actually they aren't invulnerable. They can continue to lose power, and they need to either do something productive and lift their game, or there's going to be more of the same. So I think the fact that they can lose a majority is a powerful driving force, I'm hoping. The fact that there could be a coalition opens new risk. In other words, if the ANC goes with, who do they go with? Do they have a partnership with the EFF? That would obviously I think it would have a very negative perception. Potentially, if they do one with the DA, that could be seen slightly more positively. MKs, I read a recent survey saying they're now the third most popular party. I don't know how true that is. These are concerns. You don't want a completely dysfunctional government either. So, yeah, we are watching it. It's difficult to be preemptive because you don't know how things play out. And so, it will affect markets potentially, but trying to pre-position for it is quite a difficult game to play as well.
Graeme, would the worst thing to do be to cash out everything and then say, okay, I'm going to see what happens? Presumably, do not do that.
Yeah. I think that's probably the worst. If you've come this far, after a decade of value destruction, you might as well wait another 2 months and see. You never know, something miraculous may happen. Look, I think you almost want a foreign exchange or a gold question rather than an election question.
Yes.
Yeah.
Okay, well then I'm actually gonna skip it entirely. So Grant has unfortunately had to grapple with the amorphous nature of it, and I'm gonna go to your stock picks because I've got 2 minutes left. So Graeme, I'm gonna stick with you and ask you what share you would go for this evening.
Well, I'm going to go with Aspen. Last time I was on with Mark, I went with GSK. He went with Aspen. I think the results were good. Stephen and company looked as though they really had their arms around this business. I think there's a lot of optionality. I think the South African contribution is modest at probably about 20%. They've built a really good portfolio of businesses, and they're almost becoming a platform. So when I look at this business, I think it can, after a difficult year last year, I can easily see this business delivering 10, 12, 14% earnings growth for the next couple of years or next few years. And then suddenly that 17 PE doesn't feel that far. So I think Aspen's really positioned themselves very, very nicely. And if I may say, I think the elections will definitely introduce a coalition government. What we've got to pray for is that you don't find really odd bedmates getting into bed together, because that I think could be very destructive. But apart from that scenario, I think the South African operations, as well as the rest of the market, should actually do quite nicely.
Yeah. The MK, EFF, ANC menage a trois would be truly terrifying. Grant, what's your stock pick this evening?
So I'm going with Sanlam. We've seen again a very strong update from them. They continue to be the best managed business, the best insurer out there. And the nice thing about insurance is you get a benefit of the tailwind of the market. If the markets, we've got these low valuations, and if we see some recovery over the next few years, that will be a separate tailwind over and above a very strong core business that they have. They're making good capital allocation decisions in Africa. They've done that Alliance JV, so they're not over-investing. They're not putting too much capital at risk. I think that's a really smart move. And then, of course, you've got the little kicker, the jewel in the crown there, is the stake in Shriram in India. And we work out in the next 3 years or so, that will be 25 to 30% of the business and of the earnings of the business. And that's meaningful if you consider the growth rate. That economy is growing at 7% a year, which is 7 times the rate of South African. So the potential there is massive, and I think that could continue to grow. And I think it's undervalued. So that's my pick of the day. It's Sanlam.
Okay, gents, thanks very much. And unfortunately, I don't have time to read aloud the ditty that Avio sent us, the chat GPT, a poem about Sasol. So I have to leave it there, I'm afraid. Graeme, thanks very much for joining us this evening. Graeme Körner is from Körner Perspective. Grant Nader is from Benguela Global Fund Managers. And don't forget to tune in tomorrow at 5 to 6 for the JSE's Stock Picks event, where South Africa's top market watchers will be giving you their best stock picking tips. It's up here on Business Day TV. Up next, though, The Close. Stay with us.